It's Matt with EquiPredict.com. In this video, we're going to talk about the all-important, all-critical 18-period moving average and why you should really consider mastering it and blending it into your trading style, no matter what that trading style might be. The 18-period moving average is really a critical one to have and use in your toolbox. And again, if you're enjoying some of the content we're providing here, please do feel free to subscribe to the channel. You can also head over to the website EquiPredict.com. Over there, we have a whole lot of information to assist in forecasting the stock market, and we do keep our readers up to speed and abreast of what's happening in the markets with an occasional alert from the EquiPredict forecasting model. So it's EquiPredict.com. Up on the screen here, we've got a weekly chart of ServiceNow, stock ticker NOW. It's really a powerful company. Honestly, I think it's a lot of great things ahead for it in terms of the intermediate and long-term picture for ServiceNow. I do believe it just actually recently broke out of a consolidation pattern. We'll see if it's genuine. But on the screen, we have the weekly chart of ServiceNow and going from 2022 into 2023. And a couple things we have on the chart, which we'll explain so we can kind of get set up here. The blue line, by the way, is the EquiPredict model. It's just, it helps us forecast when we should be looking for periods of bullishness and selling pressure or bearishness to be setting into a particular market. It is a forecasting model, so this period of point in time right here when it was starting to get bullish was known well in advance. We also have overlaid here. We're not going to be focusing on the EquiPredict model. We're going to be focusing on this pink line here, which is the 18-period or 18-week moving average, and we're also tied in here just for reference and additional help. This is a stochastic RSI indicator. You can choose any momentum indicator of your own choice. Could be a PPO indicator. It could be whatever you're comfortable with. RSI. In this particular case, we just chosen stochastic RSI to show you kind of how to blend the two together, the simple moving average of 18 and a indicator of your choice to help you take on a trade and be more confident if you decide to, in this particular case, go long. So what you're going to see is that as price was falling, curled into 2022, it was falling, and every time that it got up to the 18-period moving average, it hit its head and fell off. On occasion, you can, in some occasions, obviously price, as it does, will rise above and start to close above the 18 moving average, as it did here in around mid to mid-late 2022. The one thing to note, however, is a couple of things were pointing that this was going to be a risky trade to go long then and there due to the fact of two primary outstanding factors. Number one, or actually I should say three. Number one, you had price falling for quite some time. The fact that it would just turn around and start to rise upwards would I think it was not likely at that particular time. V bottoms, can happen where price just goes like this, and there's really much you can do about it. But this particular case, the rise to the upside may have been genuine if it came back down and tagged the 18, but obviously it didn't. But the two main indicators here that told us that this was not really going to be a powerful move to the upside was, number one, the stochastic RSI indicator here didn't get to an overbought position. All right, we'd like to see, that means the move to the upside really wasn't that powerful. It just really wasn't going to have a whole lot of legs to it, most likely. Number two, and I think most importantly, is that the simple moving average, the 18-week moving average, was not pointing upwards. It wasn't starting to curl upwards like this. It was actually still pointing downwards even when that price started to close above the 18. So we're not going to cover multiple time frames in this video. We're just going to do one. But if you can line up a weekly, a daily, and an hourly, and you all have 18-period moving averages laid over all of those, and they all start to curl upwards, and the price starts to close above all of those, that's usually a very good indication that there's a lot of upside ahead in that particular stock. So if you master using the 18-period moving average over multiple time frames and combining them, which we can do another video on if there's a request for it, that can be very powerful. But we're just going to be covering this one weekly time frame in this one. But what you're going to see is as price continued to fall, all right, we had price started to close above the 18, similar to how it did back here. But what you're going to see is here, price was closing at the top of these range bars here, okay, these HLC bars, and price, the 18 was starting to curl upwards. So this was an indication that bullishness may actually be ahead. Never mind other market conditions. That alone by itself was a good indication that there may be more upside ahead. You'll also notice that the stochastic RSI on this move, okay, did not get into an overbought position. But here we are, price is all the way down here, it's starting to push above the 18, which is curling upwards, and the price is starting to close in the upper near the top of these bars. And the stochastic RSI did get overbought. I mean, this is a textbook bullish indication that more bullish upside is ahead. So again, hindsight is 2020, obviously, but there's just so many stocks that do fall into the same exact setup. These are the kind of setups you should be looking for. And then you're going to see that going into 2023, the EquiPredict model alerted us at that particular time, rather, that we might see a little bit of selling pressure coming into here, and then it would start to rise, it would start to kind of go flat here in 2023, and then rise again going into 2024, which it did. But the 18, what you'll see is as it did start to curl upwards here, the stochastic RSI, as you can see from the previous screen, was overbought, and you can see that now that the price was on the other side of the simple moving average, the 18 period moving average, and the 18 was rising. You're going to see every time it came down to the 18, it tagged it and rose. So it tagged it and rose. It tagged it again and rose. So again, what you want to do is be looking for really the three rules that you should have to go ahead and take on a long position if price has been trending downwards and you want to see that reversal take place. You're going to have basically three rules. Number one, you want the price to be closing above the moving average of 18. Okay. Number two, you want to see the 18 is starting to curl upwards. All right, so you want price to close above a rising, or at the very least a flat moving average of 18. And number three, you want your indicator of your own choice to become at first initially overbought. Okay, and then potentially, and I guess most desirably, you like it to come back and pull back to the rising 18, and then off you go to the races. So I hope that makes sense. I hope that helps you in your trading strategy, and that you want to be looking for those three components. You want to be looking for price to close above the 18. You want the 18 period moving average to be flat or preferably moving upwards. And number three, you want to have your indicator when the price starts to turn around. You want it to have sort of an overbought position showing on the charts. And then if you want to add a fourth one to it, if you want to buy the pullback, that's a great kind of 1, 2, 3 move, I think they call it, where you get that 1, 2, and then third move on the tag on the rising 18 to go long. So hope that helps. Good luck and good trading.